Good morning. Today is Tuesday, May the 2nd. We are 1 minute to noon, and just want to give you an update on what happened over there on Wall Street. We have a marginal high relative to last Friday's trading, and we all know since last Thursday, market has been charging higher, and the momentum carried the U.S. equity marginally higher overnight before it corrects itself. Now, in the Dow Jones, we can see the high traded last night was 34,257.8 before it comes under profit taking. Now, yesterday we have the release of the PMI numbers for the services PMI. Market was expecting 46.6. It came in 47.3. So it's better, but it is under 50, which is technically an area of contraction. So yes, it has improved on the services sector, but still overall it is still in a contraction mode. So that caused the equity prices to actually rise a bit higher. We can see Dow Jones actually have a marginal high. Now it's getting very close to the year's high. You can see at the year's high, we can see that the market high was actually at 34,342. So we are flirting already with the year's high. There's a very good chance market may eventually take out this high and register a new high for the year. Now, whether or not it can take out 34,712, which is last October high, we will have to see whether that is enough. There's enough momentum for the market to actually do that. So even if it does, we want to see how the market reacts after it breached the level. Okay, by and large, I think the momentum that we are seeing forward is likely to carry forward. Now, tomorrow we have the FOMC meeting, which is the Federal Open Market Committee meetings, in which the governors of the Fed will decide whether to hike interest rates, and if they do, by how much. Market has already priced in the possibility of a 25 basis point or 0.25% increase in interest rates, taking the Fed fund rate within the bracket of 5 to 5.25%. So this is the highest in 16 years if that comes into being. Okay, so that is causing the market to take some temporary profit. So for today, I think the market will actually ease back a little bit, and then waiting for tomorrow's, technically the May the 3rd, which eventually will be our Thursday at 2 o'clock in the morning, in which the decision will be announced. And after the announcement, that will not be a surprise, because the market already more or less priced in a 0.25% hike in interest rates. So what's more important and what will be in focus will be the press conference after that the interest rate decision, in which the Federal Reserve Chairman will be hosting a Q&A. And during the Q&A, everybody will be trying to find out exactly within his language, what will the Fed do after this latest round of rate hike. Will there be a period of pause, or will there be any sign that he's going to give us in terms of whether he's going to cut interest rate? I think the market is pricing in the possibility that this is going to be the last rate hike, and the market is likely to pause and even cut interest rates. Now, we have seen how another bank has gone under over the weekend. We have read reports, especially yesterday, that JP Morgan Chase has actually bought over the First Republic, which is the second largest bank to close within a period of 2 months. So we can see that the high interest rate imposed by the Federal Reserve has caused a banking crisis that we are seeing, and it won't be the last. I think there are a lot of regional banks in the same position as SBV, as well as Signature Bank, as well as the latest victim, the First Republic. Now, focus has shifted over to the First Bangkok. Okay, and I think there's another bank, I can't remember the name offhand, but there are problems within the banking system. So this being the case, and of course last week we saw the first quarter GDP has actually slowed down considerably from third quarter of 3.2%, fourth quarter at 2.6%, followed by the first quarter of this year at 1.1%. So we can see that the growth rate is actually decelerating to the point whereby people are very concerned that very soon, within the third quarter, we're going to see a full-blown recession. So that being the background is the idea why most people are betting against the Fed, thinking that they have no room for another rate hike or to sustain this rate hike any much further. So this is behind the rally that we saw and whether it can sustain. Now, the fundamentals are all wrong. I've always maintained, be careful what you wish for. If everybody is betting that the Fed will cut interest rates to actually put the fight against inflation on hold to tackle the slowdown in the economy into a possible recession, then I think we will be getting what we want. If the Federal Reserve finally do cut interest rate, it is an acknowledgement that we are in serious trouble. And if that's the case, it will not be good for equity markets. So be very careful what we wish for. I do not believe a cut in interest rate is going to signal another bull run. Maybe initially that's what the market will do, but when all said and done, dust is settled, I think when you look at it very clinically is a bad development. Okay, so I'm going to watch. I'm not going to get engaged in equity markets for a time being, although short term, if the market pulls back to this area in the Dow Jones at 33,626 to 33,747, I think that will be a great area to pick up some more for those who are scalping the market, thinking the market will actually challenge the 34,712. Yes, that is a possibility, but I think it's very, very dicey to keep on chasing the market ever higher on very bad fundamentals. Okay, over in the S&P 500, we also saw a marginal high relative to last Friday. We have a high of 4,186.9 before it comes under profit taking. Now this is very, very close to the February high of 4,195.4. So I think the market now is flirting with this level, although first attempt appears to be like, it's pulling back a little bit, but I think after the FOMC, I think this is going to be enough of a move to cause the market to break out violently to the upside. Okay, be very careful chasing ever higher. Okay, over the Nasdaq, we are also seeing the market trading at a year's high at 13,287.5 and very little pullback. So this is by far the most bullish of all the major equity index. If we see a pullback somewhere within the 13,000 levels, that could be an area to pick up some more longs. But like I say, I'm just going to watch. I'm not going to get in because I feel it's a bit hairy to get in to buy at such levels. Okay, in Asia itself, we can see Nikkei actually rallied this morning to 29,278.8, and then right now this is a bracket of prices which I think will put this Nikkei index here a little bit vulnerable to selling pressure. This area is 29,000 to 29,500 levels. Okay, right now we are smack in between, and we'll have to see if there's going to be any reaction. If the market punch through the 29,500, the next level, of which I think it will be very difficult to cross, will be between 29,700 to 30,450. This is going to be a big barrier to cross. Okay, in the Hang Seng itself, we do not have any market yesterday, but this morning you can see Hang Seng actually went up to 20,286 this morning. Very, very shallow. Now this high here that we see at midday is more or less the midpoint of the decline from 20,864.7 to 19,521. Okay, so basically this is where, right now we're at the midpoint level. By and large, I think the market is still going to trade within this band of prices below the 20,800 levels. So we want to see if there's enough momentum for the market to go up and test this level. Even if the market break through 21,100, the next technical level to watch will be 21,550. Okay, 556 to be exact. Now this is going to be areas in which I'm going to watch, not taking any position. Okay, over in Chinese equities, we do not see any update on my chart here, meaning to say that mainland China could still be celebrating the Labor Day holiday. Yesterday it did not open. Today it does not look like there's going to be any update. So this is the last price traded last Friday at 4,030.5. Okay, so this is a situation in which when it reopens on tomorrow, it may play catch up to Hang Seng or to Wall Street. And that means the market may actually gap higher, depending on whether Wall Street actually continue to slide lower or does it goes up. Okay. Over in energy market, we can see crude oil pull back for $76.89 to as low as $74.50. Now, what's interesting about crude oil is when we look back, the rise from $64.33, which is the low for this year, to the high of $83.49 looks very robust. And we have a pullback here that effectively covered this gap that was created on April the 1st after OPEC Plus decided announced a production cut. So the market has actually went down to as low as $73.90 before it stabilized. Now this on Friday, and the this price is very unique because this is exactly where the 50% mark is the rise from $64.33 to $83.49. The midpoint is at $73.91. So the market went up to marginally lower to 73.90 cents just by 0.1 cent. Okay, and then it stabilized and started to rise. Okay, the high so far is $76.89. So if this low here at $73.90 is indeed the low, then I think the market is building up to challenge higher prices. Short term, everything will depend whether the market, if it's going to rally from here, is able to overcome $80. If the market cannot overcome $80 and come back down again, then maybe we will see a different structure. But for now, I'm actually quite bullish. I think that the market has enough momentum to first try this level at $78.71 to $79.83. And if it can close beyond this level, then I think the market may actually take out $83.49 to rise all the way to my ideal target here between $92.12 to $93.06. Now, don't forget, last October high, we have a high of $93.62. So by and large, when we see all this into perspective, I think there's a possibility if the market should rise, this could be a good area to take profit. I've basically gone long in crude oil, so we'll see what happens. Now, yesterday we have a mysterious move in the precious metal market led by silver. We can see that there's a spike up to $2,006 before it comes back down. This is in gold market. So not sure what caused this sudden spike in prices, but it was obviously led by silver rally, and gold is just basically tagging along for the ride. Going into this, I was actually quite hopeful that if the market can actually rebound to $2,009 to $2,015, this will be a great area to actually position short for the continuation of this fall from $2,048.80 towards possibly the $1,933. Of course, if this is the case, this is all that you can do last night. Maybe this is all that you can do. And going forth, I think the pressure will be to the downside. If the market take out this near-term support here below $1,974, and then take out $1,969, market is likely to hit straight away for the $1,950, which is the point of origin for this move up to the year's high at $20,048.80. So either the market stops at 1,950 if the market pulls back down, or the market continue to trade lower all the way into this bracket of prices between 1,914 to 1,933. Okay, so either or. Okay, but this is a long-term buy as far as I'm concerned. So the question here is, do you want to sell? If you're not able to sell above 2,000, I don't think it will make it very attractive. I would love to sell into this bracket of prices. Unless it comes, I'm not going to look at it. And definitely, I'm going to look for a buying opportunity as the market unfolds, hopefully to the downside. Okay. Over in silver, I mentioned earlier, yesterday we have a mysterious rise to $25.91, and equally fast the market reversed and come back to where it was before the rise. So this is as if this move here did not exist. Okay, it was a mystery to me. There was no news that support the rally to $25.91 in silver. But by and large, you can see prices back to where it was before the this mysterious surge here. Now, if this is the case, it created a high and it created a condition for a three-wave pullback. And if this is the case, then I think the market has a tendency to continue to slide lower below $24.50, perhaps going to $24.32 to as low as $24. Okay, so this could be an area of interest if the market stabilizes around here, accompanied by a reversal pattern in a candlestick on the lower time frame. Maybe that's where we should go in to buy. But by and large, we'll have to see, because I think this retracement in precious metal may actually last for the entire month of May. Okay, so maybe the timing is a little bit off for me. Okay. Over in dollar, we can see the dollar managed to recover, but the recovery has been without momentum so far. The rise from 100.42 in the dollar index is only managed to do a high of 102.04 last week, and then it stabilizes. So what we want to see here going forward is that this continuation corrective rally may target 102.26 to 102.62, perhaps even to as high as 103.03. Okay, so by and large, this is seen as a corrective rally, and if that's the case, eventually the dollar is going to come back down again. We will have to see what happens. Okay, but by and large, if you have not already gone long, this is a lousy price to go long. And if you're really long, maybe you want to start taking profit like I do at 102.26 to 102.62. Okay, over in the currencies, we can see sterling managed to hold on to most of its gain. The high traded last week was 125.84 before it pulls back. Now prices have come very close to another area of opportunity here. If the price can dip into the 124.50 to 124.75 levels, this could be an area in which I think buying interest will re-emerge. And I have already gone long. I have lost the patience because yesterday came very close and the market rebound. I thought that's it. Okay, so I have already gone long sterling, hoping that the market will eventually take out 125.84 all the way towards the 127 level. So there's a bit more room. So from a risk reward perspective, if you want to buy this this pair, just put your stop below 123.50 because you want to be a little bit safe. Risk reward is not fantastic, but there's still a little bit of room left. Okay. Over in Euro, I am not optimistic at all. Actually, I am relatively bearish. High traded last week was 110, 111, 1.11. Okay, and market slides down, and you can see that we have this drop here that actually destroyed the chart here in terms of taking out the support, and the price rebound here has been very, very shallow. I've already gone short on the euro. I'm going to put my stop above 111.50, so take out and targeting as low as 107.15. okay, so the next support nearby is going to be 109.09, and if this market cannot hold, it's going to gun for 107.15. okay, over in Aussie, there is very little room for taking new position. We have a spike up to 0.6668 overnight, and this is within the bracket of prices which I think is going to be vulnerable. There's 0.6650 to 0.6675, and the price has come down from there, but the target is actually not that great. I think nearby support is going to be around 0.6565, although it may go even lower. But the thing is that risk reward does not make sense to me, so I'm just going to monitor this one. Okay, now this dollar yen is a bit of enigma. It has rallied so strongly and there's hardly any reversal. The market went up to this morning high of 137.57. This is a bracket of prices. I think it may be vulnerable to selling pressure. This is 137.30 to 137.90. We will have to see. So far there is no sign that it's going to stop here. It may actually, for all I know, gun beyond 138. So for time being, I'm just going to watch this move here. But if it shows a reversal signal from here in the afternoon going forward, then I think that could be a low risk opportunity. If I'm going to sell, I'm going to put a stop just above 138. Okay. In dollar CAC, you can see dollar CAC is pulling back from a high of 136.67 on Friday. And you can see this pullback may actually extend a little bit lower. So if the market continues to go lower, somewhere between 134.40 to 134.85, that could be an area of buying opportunity, because the rally from 133 looks to be very, very firm. So I think there will be a continuation of this rally and possibly to target 139. Okay. So when we look at Bitcoin is offering us a little bit of opportunity right now. We can see that the price has been trying to go back above $30,000. Failed yesterday. No, not yesterday. It failed on Sunday, and we can see whole of yesterday it was basically one-way street, and it went down to as low as $27,666, and then it stabilized. Now this is a very deep correction, because this level of 27,666 is very near the 78.6 retracement of this entire rise from 26,981 to $30,022. So it's a very, very deep correction. So from a risk reward perspective, it does offer us a relatively low risk, high reward setup here. I've basically gone long on Bitcoin here, but I'm taking a very small position, a very small exposure. So if I'm right, I think the market may actually go beyond 31,000 towards 33,000. Okay, so this is an area of opportunity for me. So you can take it into consideration. Don't say that I say so. I just say that I am already in. Okay, there you have it. I will give you another update tomorrow, and in the meantime, you take care. Be safe. Bye bye.